Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, if you look at the Nifty, it's now slipped below the 26,000 mark. Remember, we were hovering around 26,120 in the morning trading session, but we are now down at the day's lowest point. 73 points gone, and we are now below that 26,000 mark yet again. So the beginning of the day was pretty smart, but towards the end of the session, we have given up a lot of those gains. Now only IT, the Nifty bank and private banks are the sectors that are still holding up into the green. Rest of the pockets have all slipped. This is all despite that India VIX still is trading about 3% lower in trade and is at near about 13 odd levels. But when we look at the sectors that have really lost a lot of ground, you can see it's real estate down by about 2%. Metals have lost sheen to 1.5%, almost lower there. Oil and gas also fizzles out. You see 1% lower for this one. The small caps and mid caps are also trading under pressure. When we look at the top stocks there, Tech Mahindra, Eicher Motors, Bajaj Auto, Wipro, Asian Paints and Infosys are among the top movers, but we just have about 10-12 stocks that are in the green. Rest of them have all slipped. BEL, JSW Steel, Max Health, Tata Steel, Grasim, Coal India, a lot of those metals and commodity related stocks that are lower in trade at this point in time. Let me also help you understand what's the action like as far as the top gainers and losers list is concerned within the Nifty 500 basket. Well, you do see a lot of names within the gainers. Swiggy is up 5.7% higher at 407 today. You also have names like Asahi India Glass, with Thangamile Jewelry that's up, Bliss GBS Pharma is up, Aztec Life Sciences. These are some of the stocks that are actually hovering higher. But let's actually go across to our guest. Mr. Ambarish Baliga is now with us, market expert for the day. Warm welcome to you, Mr. Baliga, and thank you so much for taking the time out. Always good to have you with us. First up, help us understand what do you make of this sharp 100 points of a loss that we are seeing in the markets. We opened up pretty steady in the market, yet again hoping that this week would again see attempts towards those record high levels. But again, by the end of the day, we've lost quite a bit. How would you explain this? Why do you think we have lacked so much strength over the last couple of days and it continues?
No, basically, if you see in the last couple of days, if not the last couple of weeks, we have seen the Nifty and the Sensex moving up. And we have been close to the new highs as such. And maybe either 100, 150 points more on the Nifty, we would have seen a new high. But despite all this, most of the portfolios have been in the red all through. And that's because when I say most of the portfolios, I'm talking of the retail and the HNIs, not the institutions. That's because most of the small cap and the mid cap stocks have been losing over the last few weeks, if not the last 1.5 to 2 months. So because of which we have seen that the interest of the retail, which has been supporting the market since the last 4-5 years, since the COVID, that's been coming down to a certain extent, because if you keep seeing losses in your portfolio, you don't prefer to invest fresh. So I think that issue is. This is despite the earnings. Q2 earnings were better than what was expected because most of the expectations were muted.
Yeah.
And the real earnings were better than what was expected. Most of the macro numbers have been decent. And I think the only sort of a joker in the pack is the US-India trade treaty. As and when that happens, it is expected that it should happen quite soon. It was expected towards the end of November, but now maybe, December first week or second week. I think before Christmas it has to happen. If that happens, yes, I think that will be a trigger. And okay. I suppose the other negative which has happened in the recent past was the rupee, which was on to 89. It in fact broke that.
Absolutely. So, Mr. Baliga, we are still reeling with all these uncertainties at this point in time. What are you advising investors to do at this point? For traders, it's a no prediction kind of a market. You start off positive, you end lower. You start off negative, you go up suddenly. So, for traders, it's a very difficult market. For investors, largely, how are you advising them? Is it a time when you just stop watching the market every day, keep continuing your SIPs, and then hope that better times will come in soon?
No, better times should come because if you look at the earnings, they are clearly pointing out that possibly Q3 could be much better than what we have seen in Q2. Because Q2, in fact, we had not seen that consumer boom because people were waiting for the GST announcements, I mean, the final announcements to come because the initial announcement came on the Independence Day. And post that, people had held back major purchases because they were waiting for the GST to be reduced, and that was done on 22nd September. And even post that, for the next 1 week, 10 days, most of the companies were in fact having issues with the GST supply chain, and there were a decent amount of write-offs which happened. But October-December quarter, the current quarter we are talking about, we should really see the full effect of that consumption push which we saw, and those things should be much better than what we have seen in the recent past. So I think that should be one trigger. Looking at all that, I think one should look to buy when the markets have corrected. When I say markets have corrected, I'm talking of the small cap and the mid caps, the way they have corrected. I think
Yes.
there's a decent amount of buying opportunity out there.
Absolutely. Should one stay away from the mid and small caps at this point?
No, you should not. In fact, I'm saying, I mean, if you're decently confident of the stocks which you have in your portfolio, I think this is a great time to average out. I mean, don't buy just because it has come down. If you have confidence in the stocks you have bought, you understand what the company is doing and decently positive on the way ahead, this is the time to buy.
This is the time to buy. Fair point. So after the end of Q2, Mr. Balika, any places where you believe there is a considerable space for an upgrade from this point in time where the turnaround has just started? We've had at least 4 to 6 quarters of either muted to disappointed kind of earnings growth, but
Right.
has there been any green shoot that you've spotted?
No, green shoots possibly could be in IT, where again I think we have seen a decent move today. And the other space clearly would be consumption because we've already seen a consumption boom in the last last 2 months, and I think that's going to continue. But still, we have had some of the consumption stocks moving up, but still I think there's a decently long way to go. And keeping the US-India trade treaty in mind, I would surely look at some of the export-oriented stocks where we have seen a decent correction. For example, the textile space, the specialty chemical space, I think that's one which should get a booster.
Okay, fair point. Let me ask you on a few pockets. Amrish sir, we have always spoken a lot about, the new age tech companies with you. By the end of Q2, have you, gone on to understand that more and more companies are now getting on track and maybe this is the right time to start looking at them? Because in the last couple of years, we have only seen a lot of cash burn, bottom line in pain, but are things changing with a lot more companies than just the, surface at this point?
No, I think there's a decent amount of clarity among the founders and the promoters of these new age companies that they need to show profits. At least at the EBITDA levels, we should see a decent amount of profit up move. I mean, quarter on quarter. Secondary market gives premium for decent cash flows. So this has to be clearly been seen in these companies. So from that point of view, I would say something like a delivery. I mean, after the correction which you have seen in the recent past, I think it's a good time to start looking at buying delivery again. I mean, we had a very good move, and then post that, the last couple of weeks we have seen a correction. So it's a good time to again start buying delivery at this point of time.
Okay, got that. In fact, let me just look at Swiggy. At this point in time, the stock is up by about 5% odd. This is, a smart uptick that we are actually looking at on the stock right now. This is despite the fact that, remember, Swiggy's losses widened by 109% to $178 million in H1 FY25, rising quick commerce spends that are going on as well. This is what some of the investors at Process have found out too, which owns 25% of Swiggy, which has said that despite the rising losses, Process, which owns 25%, has reported strong demand trends for January to June period. So maybe that is the key trigger there. The customer base has also grown by 35% year on year to 21.6 million. The gross order value has risen by 43% on the back of food delivery expansion and formats like Bolt that the company has launched too. Any suggestion on Swiggy and where does the stock go from here, sir?
See, I mean, whatever you said, it clearly is a positive for Swiggy. I mean, the market is growing, no doubt. But I think from an immediate perspective, short to medium term perspective, we also need to see as to how this labor code is going to affect life
Yes.
of Swiggy and Eternal.
Absolutely. Okay, I think Mr. Balika's connection just got lost. We'll try to get. Okay, is he back? Okay, Mr. Balika is back. Yes, sir.
Yeah. So I think I'll wait for the comments from the management of Swiggy as well as others in the same space to see as to what is the effect of the labor code on on their sector, and more importantly, I think I'll wait for this quarter's earnings to see as to what difference it has made.
Absolutely, you pointed out correctly, sir, because that's the big news there. For the first time, which is good news, that gig workers and platform workers are being identified and are being defined in the labor code as well. So that's good. And more people who were already looking at these new age job roles will probably be able to think of it better because of now a security being added to it, a social security aspect being added to it as well. But at the same time, even though companies like Zomato and Swiggy, they welcomed this new labor code from the government, there is a lot of analysis going that this could lead to 1.5 to 2.5 rupees per food delivery order, as an added on cost for these companies. But we've also seen, Mr. Valiga, that these companies are also getting very smart because now they know that a lot of lives are getting dependent, at least in the urban areas. They can't do without, having a food delivery company coming or food delivery person coming to their houses once in 2 days, or at least one day, for a quick commerce company to be coming in every day. So that's become the norm, and it's only going to grow. Our dependence is only going to grow. So once that happens, they've been consistently raising their marketplace fee, which people are not minding because now they are used to of convenience at this point, and this could also go on. So this, kind of added on cost could probably be offset in that fashion.
No, that's true, but then one has to see as to how much of the added-on cost will market accept. I mean, we need to see as to where's the breaking point.
Yeah.
Because at some point of time, it will become expensive.
Yes, absolutely, and that's something that we will of course wait to find out as well. Apart from this, Mr. Balika, which are the other places that are looking positive to you? Are you looking at, say, the defense and the railway story once again at all because of these increased news flows on order wins and a lot of, big signs that we've been doing? Although at the same time, we've had a very disturbing news of Tejas in Dubai, but at the same time, what are you looking at in defense space?
No, see, one good thing about both these spaces, railways as well as defense, is the order flow, which we have seen in the last 2 to 3 years, and because of which we have seen most of them have become multi-baggers. But one thing which most of the people are not talking about is the execution risk, which is there for both these sectors. And we have seen that happening as far as railways is concerned. Most of the stocks corrected sharply because of the execution issues. And like those specific companies, especially the large ones in that space, have set that right over the last 12 to 15 months. And now they've come back on track. So something like a Titagar, I think from the railway pack could be looked at from that point of view. But when you are talking of defense, I think the execution risk is still there. I mean, the unfortunate incident of last week. I mean, that's quite a sad incident which happened. But that this again shows that there are some execution gaps as far as these companies are concerned. And when you're talking of the shipping, shipbuilders.
Yes.
I think their total capacity is booked for the next 10 to 12 years. I mean, quite a few of the larger ones. I mean, if you're talking of Cochin, I think the next 10 years order book is full. Unless they increase the capacity, you can't do that overnight. It takes a long time. Whereas order flows have been coming, but you can't increase the capacity overnight. So unless we see, at least some sort of a news on that front that they've been able to add capacity, I would be a bit circumspect at this point of time. I would be a bit cautious because the market has over discounted.
Absolutely.
As far as the defense stocks are concerned.
Absolutely. In fact, also wanted to ask you in the same breath, what about the capital markets related stocks? We've had a long period of consolidation in this space, but of late, stocks like BSE have started to sprint quite a bit, 15% in the last 1 month alone. It's hovering near the record high levels yet again. With even though the benchmark indices still struggling to move beyond 26,000 on a sustainable level, what is in the offing for capital markets related stocks, especially the indices?
No, I think, the best seems to be already been priced in. I mean, the way the volumes have gone up in the last couple of years, and that is clearly shown on the balance sheet of most of these players. But if we are talking of the broking houses, I would be a bit cautious at this point of time, looking at the sort of diktat which has come from SEBI as far as like institutional brokerage is concerned. I think that can be a big hit. So I would, at this point of time, not really go out and buy into, any of these market-related stocks.
Okay, in the same breath, could you help us understand what was your view with the Grow IPO getting successfully launched, or 5 days of a runaway move, and then therefore a speed break that we saw because of the short squeeze that was seen in the market. So such interesting stories also coming in. Of course, we can see undying appetite from investors for these IPOs, even though the valuation picture continues to be talked about. How are you looking at such stories?
In fact, Grow, founders are from the market itself, market connected, and no one really expected this sort of listing for Grow. People expected about maximum of 5 to 10% sort of a premium. But then I think it was more to do with the technical aspects than fundamental, because there was a short squeeze, and at every higher level there were more short sellers coming, because, like I said, it was not just expected. For a stock like this to move up 50-60%, it moved nearly 100% from the IPO levels. But then, if you look at it from a fundamental angle, it's just a bit too expensive. It was expensive at the IPO levels, so even at the current levels, it's quite expensive. And we should remember that within a month, part of the anchor book becomes free. So there would be coming in from there. And in the next 6 months, those who had the shares pre-IPO, because unlike a number of other IPOs, as far as Grow is concerned, there are quite a few HNIs who were allotted shares before the IPO. And I think the last allotment had happened at levels of about 134, 135. So I think a lot of those people will come in to sell when it becomes free. So, I don't think one should see from a shorter-term angle. Short-term angle, a lot of things can happen based on the technical situation in the market. But if you're talking of longer term, I think if you have free shares to sell, should actually book out at this point of time.
Okay, fair point. So I hope this has given a lot of clarity to all those investors who've been looking at this space pretty largely. All right, Amrish ji, we'll just hold for a bit, because we have to focus on a very important news. This is with respect to a crucial ruling that could have a far-reaching impact. The Supreme Court has agreed to drop criminal proceedings in the fraud case against promoters of Sterling Biotech. Remember, this is an order that was passed on Friday. The Apex Court ruled the proceedings will be dropped if brothers Nitin and Chetan Sandesara will pay $570 million. That is 1/3 of the dues that are owed in a $1.6 billion fraud case. The deadline for the payment has been decided at 17th December. Let me go across to my colleague Anisha Mathur, who's been tracking this case very, very closely, to give us an understanding of what exactly is happening there. First up, Anisha, help us understand what do we understand from this court ruling, and what are the lawyers for these brothers saying at this point in time? Are they willing to pay up 1/3 of the amount and therefore see all dropping of charges completely?
Well, Sakshi, let me first clarify what the order actually is. Sure. This was in fact an offer from Chetan Sandesara, Hemant Hathi and other accused in this bank fraud case, because remember, the entire case, the one-time settlement evaluation had been made when this matter was before the NCLAT. An offer was made before the Supreme Court by the lawyers, including senior advocate Mukul Rohatgi. And let me just read out the order that has actually been passed on the 19th of November. subject to deposit of 5,100 crores, and that is the amount, Sakshi, that the accused persons have to pay back. Remember, the total amount of that bank fraud was over 5,900 crores. What the court has said, if they pay 5,100 crores towards the full and final settlement to the lender, banks and investigating agencies, then these petitions that have sought closure of the FIRs of the all the proceedings under the PMLA, under the Fugitives Act, all of those proceedings would be closed down. And I'm just to clarify for our viewers, I'm reading this out once again. The petitions to close down the FIRs and close the criminal proceedings are allowed. The quashing will be subject to the deposit of 5,100 crores. 5,100 crores is as a full and final payment on or before 17th of December. They can make this payment in tranches by the 17th of December, but they have to pay this full amount. Now, this was an offer that had been made about 2 months ago before the Supreme Court. The CBI had been asked to respond. The CBI said that they are willing to enter into this kind of one-time settlement. The court had also, in fact, looked at the details of what had happened earlier, the kind of allegations that were there, what the banks had said. The banks and the CBI have both filed their responses to this particular offer, and that is why on the 19th this order has been passed.
Absolutely.
Once again, I'm reiterating, and one more important point, Sakshi. This judgment will not be counted as a precedent. The Supreme Court has made it very clear that these directions are only for this particular case. They shall not be treated as a precedent.
I think that's a very important point, Anisha, because a lot of people would actually go on to understand that after being accused for defaulting on domestic bank loans, these brothers whose companies spanned industries from pharma to even energy, they fled in 2017 on Albanian passports, and they are considered as economic fugitives. At this point in time, we have many other cases like Nirav Modi and Vijay Mallya. So do you think this case could be a precedent? And you've said no, the court has clarified
The court has clarified this very clearly, that this case will not be counted as a precedent. In fact, let me just take you through one of the very interesting arguments that have been made by Mr. Mukul Rohatgi when this matter had come up back in just about 2-3 weeks ago. He had argued that the respondents want to come out of the rigors of the criminal proceedings and other proceedings, that they having roots in India and the country will be beneficial in all respects, and therefore he had offered, in fact, to submit 500 crores within 5 working days of 4th of November. That is when the original offer had been made, that I will pay 500 crores within 5 working days. And on that because of that assurance, the court had asked the CBI to file its response on whether they will agree to this kind of one-time settlement or not. This matter was taken.
Now, Anisha?
Now, what happens next, Sakshi, is simply this. The Sandesaras and their co-accused will submit the entire 5,100 crore rupees in the Supreme Court's registry, which will then disburse this money to all the banks and the lenders who have come up before the court so far, against whose complaints the CBI, ED and PMLA proceedings were going on. The money will be paid back to these people. But what we need to consider really here is that this was done as, again I'm reiterating, as a one-time settlement in this particular case.
Sure.
Even though the total amount of bank fraud that was calculated was over 5,939 crores. So some money has still been lost, over some 800 crores almost not coming back, but the rest is coming back, and only for these people. But we'll have to see if there is similar offers being made by any other.
Absolutely, that will be the most important to watch out for. Anisha, thank you so much for that. Let me go across to Amrish ji. Amrish ji, how do you read into this kind of settlement being discussed at the courts for economic fugitives? Do you think this will be seen as something that could be referred to in other cases, like in Vijay Mallya's case or in Nirav Modi's case? Both of them have so far not agreed to defrauding the system so far, but help us understand what could this mean?
Although the Supreme Court has said that this should not be used as a precedent, but it would finally be used as a precedent. Because the thing is clear, you still leave the country, hire the best of the lawyers, and then pay only part of the money. Because I'm told this is 1/3 of the total amount due, just not the principal, but the total amount due. And like you rightly said, why shouldn't Vijay Mallya be using this? He was willing to pay the full amount. Now, if he agrees,
Yes.
yeah, like even half the amount, he should be allowed to come back. I think the same issue will happen as far as Nirav Modi is concerned, and everyone else who's left the country after defrauding the banks and the financial system.
Absolutely. Meanwhile, viewers, we have lost some more ground. I think 134 points now lost on the Nifty. We are at 25,933 at this point in time. Just 2 minutes to go before we shut shop for the day. But this is an interesting development that we are looking at this point. Banks, will they be winners in this case? Whatever the court decides, some money at least coming back, if not all, like Anisha pointed out.
Yeah, banks finally would be the winners, no doubt, because to whomever it is due, they would have written it off, and now whatever comes in is pure income.
Absolutely. All right, Amrish ji, thank you so much for being with us on the show. It's
Absolutely.
always a pleasure to have you and to seek such wonderful insights. Thank you.
Thank you.
All right, 25,940 viewers, and that's where we are at this point in time, just slightly off the lowest point of the mark that we have, but only IT, the sole winner in trade today, is what we have in the green. Tech Mahindra, Eicher Motors, Bajaj Auto, SPLI, Wipro, Shriram Finance among the top gainers, like I pointed out earlier as well. But a lot of metal laggards is what you find today, like JSW Steel, again, a lot of commodity-related spaces, Grasim, you have Coal India, that's down. Dr Reddy's from pharma space is down in trade. Max Healthcare is down from the healthcare pact. Of course, Max Healthcare had moved up on the back of those good results that we had seen for some time to come. And, within the big movers as far as the Nifty gainers on Nifty 500 are concerned, Swiggy, 5.5% higher. Bliss GVS Pharma. You also have names like Thangamile Jewelry, I pointed out. Asahi India Glass, TD Power Systems. ITI also about 7% higher in trade. And let's look at even names like... we are looking at currently NRB Industrial Bearings, maybe 12% higher. These are the stocks that are truly moving in trade despite the overall index weakness that we've been seeing. Final print in front of you, 121 points lower at 25,946. I hope this has truly helped you understand how the market sentiment truly is, but we'll hope that we have a better day tomorrow morning again. Stay tuned with us on Business Today Television. The coverage beyond the market hours continues from the world of business and finance. And stay tuned for market coverage tomorrow morning at 9 a.m.